Hello friends, let's start the video. The investor in this email says that he started investing from October 2021 and he plans to invest around 50 lakh rupees, which is a very good capital, and the more capital you have in the share market, the more easy it becomes for you to create your wealth. And he has mentioned that he wants to keep the portfolio for minimum 5 years, which is good. And he also wants to know how much he can expect with this portfolio after 5 years. So see, this nobody can tell you, because nobody has the power to predict the future or to see the future. We can only select good companies from our end and hope that those companies provide us good return. So basically we have to keep doing our karma in stock market, which is good karma, finding good companies and sticking with those companies. And फल की चिंता ज़्यादा मत करिए, because any which ways that is not in your control. What is in your control is selecting good companies, which we should do. And he says he wants to trim his portfolio, and he also has a plan that he wants to remove stocks which are in small quantities and keep investing in already invested stock which have bigger quantities. Okay, good. And he has asked me to inform him whenever the video is ready online. And he also says that I'm doing a good job, so thank you so much. And he also says give us an opportunity to help you out if you find okay. So thank you so much for this again. The only thing that I need from you guys is your feedback. If I'm doing something good, then you can let me know through comments, which you guys are also doing. So thank you so much for that. If there is any area which needs improvement, do also mention that. I will try to improve my videos. So keep supporting, and from my end I will also try to give back whatever I have learned so far from stock market. The learning for me also has not stopped. It is still going on, but whatever I have learned so far and whatever new things that I'm learning, I will keep sharing those through the videos so that more people can learn through it. So now let's get cracking. So the investor has sent an Excel file which has a list of the companies that he has and the sectors, and I have added 2 more columns in this file which was not there, which is the total invested amount, which you see highlighted here, and the allocation percentage. The total number of companies are 40, so we will not be able to discuss them in detail. We will quickly go through them whether these are good companies or not. So here you can see the total invested value is 37,41,000, and currently there is a loss of close to 4 lakh rupees. So the first company is Naukri, and it is from the communication sector. Number of quantity is 35 and the invested amount is 1,75,000 and the allocation percentage is 5%. This is a good company and has a very good management as well. This company has good brands under its umbrella like Jeevan Sathi, Naukri.com, and it also invests in startups. Next company is FL, and it belongs to the same sector, and the invested amount is 49,000. This company is into the mobile advertising field. It's a good business and company is also doing very well. The only hanging sword on this company is the data privacy policy. Whenever there is changes related to the data policy, then the business of this company might get impacted. So keep that in mind, otherwise it is a good company. Next company is DMart, and it is from the retail sector, you can say, and the total invested amount is 3,17,000, which is close to 8% of the total capital. This also is a good company from the retail sector, has huge potential to grow in the next 5-10 years as well, so you can continue to hold this company for long term. Next is Jubilant Food, also known as Domino's, because it holds the franchise for Domino's and Dunkin' Donuts as well. Plus it also has franchise for Popeye, and it also has one of its homegrown brand, which is Hong's Kitchen. This company is also growing very rapidly, and it also has huge potential to grow even more in India. Total invested amount is 1 lakh rupees and the total allocation percentage is 3%. Next company is Relaxo. It is from the footwear sector. Number of quantity is 80 and the amount invested is 97,000. Allocation percentage is 3%. This also is a good company, a leader in the footwear sector. In India currently there are still a lot of unorganized players in the footwear sector. Relaxo holds just around 10% of the market share from the organized market. Remaining is still with the unorganized market. So still there is a lot of potential for Relaxo to gain more market share from the unorganized player. Next company is Tata Motor. This belongs to the auto sector. Number of quantity is 147. Total invested amount is 67,000 and the allocation is 2%. Auto sector in the past has not been a sector which has provided good returns on consistent basis to its shareholder. So it's a little dicey sector to have in your portfolio, but if you have invested in this company based on the EV narrative, then you can continue to hold this company as well. Next company is Hindustan Unilever from the FMCG sector, and the total invested amount is 2,28,000. Allocation percentage is 6%. Next is ITC, again from the FMCG sector. Total allocation is 12,000 rupees. And then we have another company from the FMCG, which is Tata Consumers, and the allocation amount is 9,000. So currently we have 3 companies from the FMCG sector. All these 3 companies are fundamentally good companies. Hindustan Unilever is a safe company. It will grow your money, but it will grow it very, very slowly. But the risk also in this company is very, very less. And for ITC, this is a good company in terms of dividend, but in terms of share price or capital gain, in the past the company has not delivered well. So fundamentally there is nothing wrong with ITC also. And Tata Consumer also is a good company. In the FMCG sector, this is the aggressive company, which you can say, which will provide you better return than Hindustan Lever and ITC. So in my view, if you want to trim something, you can trim something from here, from the FMCG sector, because currently you have 3 companies from the same sector. Next company is Reliance and total quantity is 35, invested amount is 84,000. This also is a good company, you can continue to hold it. Next company is Bajaj Finance from the finance sector. It is the number one NBFC, so you can continue to hold this company. The invested amount in this company is 1,93,000 and the total allocation percentage is 5%. Next company is HDFC Bank and the total quantity is 88. Invested amount is 1,26,000. Total allocation percentage is 3%. Again, a very good company, number one private bank in India, which is growing its profit at a very healthy rate. You can definitely continue to hold this company. Next company is again a NBFC, Muthoot Finance, which is mostly into the gold. This also is a good company fundamentally, but in terms of return, it is little slow. Next company is SBI Card and the quantity is 10 and the total investment is 9,000 rupees. So from the banking side, he has one company which is HDFC Bank. From the non-banking side, which is the NBFC, he has Bajaj Finance, Muthoot Finance and SBI Card. So out of these three companies, you can decide to trim maybe two or one. So far, whatever companies that we have seen, all companies are fundamentally good companies, which shows that the stock selection is good, but we need to work on the allocation percentage and also need to reduce the number of companies so that we can be more focused and the tracking also becomes easy. Next company is CAMS and it provides services to a lot of mutual funds. For this company, I am little dicey. The business that they have is very good. It is going to continue in future as well. But whether we'll be able to get consistent return from this company, on that I have some doubts. But fundamentally and business wise, this also is a good company. Next company is from the insurance sector, which is SBI Life. This also is a good company from the insurance sector. You can continue to hold this company. Next company is again from the insurance sector, which is HDFC Life. And the total investment is just 1,800. So from these two also you can continue with one company, a company on which you have more conviction on, because both companies are good companies. Next company is Divi's Lab, which is from the healthcare sector or pharma sector. This also is a good company, a leader in the API segment. You can continue with this company. Next company is Prince Pipe from the pipe sector and the total invested amount is 1 lakh rupees. And then we have another company from the pipe sector, which is Astral, and the total invested amount in Astral is 34,000. So both these companies are again good companies. Astral is the market leader in pipes and Prince Pipe is a small company which is growing its profit at a very healthy rate. In this case, I would have just little reverse. I would have invested more in Astral and less in Prince Pipe, because Prince Pipe is still small, so I would have kept my investment small in Prince Pipe. But again, as I said earlier as well, both companies are good. Next company is Polycab, which is from the wires and cables sector. Total invested amount is 85,000. This company also you can continue to hold. It is a good company with a good business. It is also growing at a very healthy rate. Next company is MTAR Technology. This also is a good company, a newly listed company, but a small cap company. This company is in the business of manufacturing equipments related to nuclear, space, aerospace, defense, etc. Next company or the group of companies is from the IT sector. In the IT sector, we total have around 7 companies. There is TCS, LTI Mindtree, LTTS, Happiest Mind, HCL Tech, Infosys and Latent View. So definitely you can trim some companies from this sector. You have too many companies from the same sector in your portfolio. Between TCS and Infosys, you can choose one company. Both are heavyweight of the IT sector. LTTS you might keep because its business is a little bit different from the normal IT services companies. It's a product based service provider. But all are good companies. You can choose the company where you have maximum conviction and whose profit are increasing at a good rate. You can keep those companies in your portfolio. Next company is Asian Paint and the invested amount is 1,41,000. This company again is a good company, you should continue. Next company is Deepak Nitrate from the chemical sector, a leader in the sodium nitrate business. Total investment is 1,30,000. A good company, a market leader in its sector, you can continue with this company. Same with Pidilite, a very good company in the adhesive sector, a market leader who has around 70% market share in the adhesive sector. Total invested amount is 1,18,000, and I am assuming you will be increasing the capital allocated to Asian Paint Pidilite, because looking at the size of the portfolio, the allocation seems to be less in this company. The allocation for Asian Paint is only 4% and for Pidilite is just 3%. Next you have Clean Science from the chemical sector. This again is a good company, a newly listed company. Nothing wrong with this company as well. Next company is Rosari Tech, again from the chemical sector. This also is a good company but a small cap company. Next is Sumitomo Chemical, which belongs to the agrochemical sector. This company also is doing very well in terms of its business, its profit. Again a good company. Next company is Tata Power. Total allocation amount is 76,000. Then he has IEX and IGL from the same sector, which is utilities. So again the power sector has not delivered very good returns on consistent basis to its shareholder. So this is a sector I generally avoid, but in case you want to bet on the EV narrative, you can bet on Tata Power and continue with this company. So this brings us to the end. Now one thing is for sure that the company selection has been very good. Almost all the companies in the portfolio are fundamentally good companies with good business. And with these companies in the portfolio, one thing become clear, that this person will not lose money in the stock market if he continues to hold these companies for long term. On one part we are good, that all the companies are good companies. Now coming to the second part, which is how we can maximize the return from these companies. which even this person is trying to do, which is great. From the list of companies that you have in your portfolio, you should keep companies where you have maximum conviction. And once you bring down the number of companies and you increase the capital amount to 50 lakh and you hold this portfolio for 5 years minimum, then this portfolio can give you very handsome return. So that's all in this video. We'll meet in the next video with some more information. Thank you.